Hello and welcome to Stockwatch, presented by me, Evan Lucas, for Go Market Securities. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature. None of it should be taken as any form of personal advice. Go Market Securities does not know your personal scenario, nor your personal financial goals, and therefore none of it should be relied upon as any form of advice at all. It is just general in nature only. We're obviously in a high volatile market at the moment, and unfortunately I think we're going to have to put up with that for at least another 6 months. The better question at the moment is, what does well and what doesn't do well in a high inflation world? Because that's what we're currently going through. What stocks actually benefit and what stocks don't? Let's start with the ones that don't. They're pretty easy always to figure out. You look at consumer discretionary, you look at travel, you look at luxury goods, or anything that requires additional spending from the consumer. The things that a consumer can tighten their belt on, if they're in that space, they're the ones that tend to sort of go by the wayside. And you're already starting to see that in terms of that areas and spaces you're moving. They're the ones that therefore you can see price increases that feel from it. You also then look at, if they're consumer discretionary stocks that require imported goods, the inflation on them also comes through and hurts, because the ability to actually cut margins gets smaller. The ability to also make sure that you're targeting the right client gets smaller. All those things are why in a high inflation market, those are the stocks that go by the wayside. On the flip side, there are stocks and sectors that actually completely look through all this because they're constant. They're things that we always need. So you normally look at what we call the essentials, things that everybody has to basically deal with every day of their life, no matter what goes on: transport, education, health, energy, food. They're the ones that are never ever changing. They're always the 5 things you need. So if you look at the health and energy sector, they pretty much are unchanged. In fact, during these periods, they tend to either slightly increase or flatline in that area. You then go into things like specialized manufacturing, things like, mining companies that require some form of high-end engineering. They're the firms that do well. Industrial firms on the back of it. Gold always is one to look at, there's no doubt about that. And then education is another space to remember that education will always be there. You always need it. There is always more children coming into it, and therefore more university students going into it. And normally during these prices and scenarios where things change markets, possibly change people's employment and their overall thinking, people have to get re-educated. So all of that filters into why they do quite well. And so in a high inflation environment, it's not the end of the world. You just have to work that little bit harder to find the sectors and stocks that you're after that can give you the growth you want.